Hey there, Steve Rubis with another installment of Capital Markets Investor Relations in 2 minutes or less. This is our second video in the series on Delta reducing its first quarter 25 financial guidance. And to recap, on March 11th, they lowered their revenue, operating margin, and non-GAAP EPS guidance. About a 50% reduction at the midpoint led to an 8% intraday move on a $30 billion stock. And this was all done off cycle, and that's why there was such a surprise and move in the stock. So let's get into what are the three main things that this guidance reduction could signal. And on the most basic level, or the face of it, there's probably a looming recession. And then you start to think, what are the drivers that are out there that could be driving this negative macro change? Well, you have the DOGE cuts and a lot of government employees losing their jobs. You've got tariffs, Trump and his trade wars. Those are two main drivers of a change in macro. And third, you have the white collar recession. So you have three legitimate drivers that investors will believe. But the problem is when you drastically change your guidance so soon, that's what leads to disruption, and you saw it in the share price. So what's the second signal here? It signals to investors that there's an uncertain operating environment for Delta Airlines. And again, the key is when they gave their initial guidance in February, they were signaling there was very strong unit and volume growth to be expected in fiscal year 25. Changing their guidance suggests that maybe tariffs and the DOGE cuts have really reduced the strength in those volume and unit growth economics. And the third signal, which is what I think is really going on as an informed reader and consumer of investor earnings releases, is that I think there's a guidance problem at Delta. And yes, these macro issues may be legitimate, but I think it's guidance, and it's for two reasons. One is it's the timing. They gave their initial guidance around February 26th, and now 2 weeks later, they're reducing their guidance by almost 50%. That's a 2 week later reduction. Investors don't expect guidance to change that quickly. And typically when guidance changes that quickly, somebody got something wrong in the process, either a data input, a calculation. And if you really dig and go back to that fourth quarter earnings release, you can see where the problems are. I found it very difficult to tie out to the expectation for non-GAAP EPS for 2025 relative to consensus. I felt it was very hard to audit, and the way that the wording in the descriptions in the press release were very cloudy and murky at best. And then the second thing here is it's an off-cycle guidance change. The best practice is you only reduce guidance at the quarter point, if you can help it. Let the numbers settle throughout the quarter and always change at the quarter. Here they changed 2 weeks after the quarter, after the initial guide, and ahead of an investor conference. This is a bad situation to find yourself in, and it typically leads to additional reductions throughout the year. Because again, the macro may be real, but it's really illustrating that there's probably some sort of process issue around Delta's ability to provide financial guidance. So with that, I could be completely wrong, but this is a take, and I hope you find it interesting. And when investor relations is too tough for you, it's just right for me. Let's have a discussion. Thank you.